How's it, guys? Welcome back to FX Rhapsody. Today's video is going to be all about Fibonacci, how to spot those entries in the Fibonacci, and just the way that I look for those entries. I hope this helps you because I've had a lot of questions about, how you trade the Fibonacci, how you enter, and all that. So yeah, let's just have a look at this video. And I thought, let's just make one. The next one is going to be on fair value gap. That's going to be the next video coming out. So just keep an eye out on that as well. Before we hit the charts, go visit my websites on the bottom left corner over here, where you can find previous material on trading, previous analysis, where I show you how, with all my previous analysis, I use the Fibonacci and I use the fair value gap. So just go check them out. Preferred brokers as well, guys. Link is in the description. Just go check these guys out. They are also very brilliant and a reliable broker that you need behind your side. So let us go to the chart. So I'm going to be doing it on the daily time frame, okay? But the concept of Fibonacci is, I'm showing you on the daily time frame, but you can do it on any time frame. Take what I show you now, go practice it on your lower time frames, your 4 hours, your 1 hour, your 30, 15 minutes, 5 minutes, 1 minute. It is the same thing, and it happens every single time. Okay, so like I said, this is the daily time frame, and I'm just going to show you the things that I look out for when it comes to the Fibonacci. So let's just have a look. So we have a daily time frame. I just took a lot of we're looking at from April. This is the EURUSD. And also, Fibonacci works on indices. You look NASDAQ, all those things. Just go, whatever you are trading, go see, go back test. That's how you practice in your trading. Go back test and see if it works. If you want to have training in trading, go back test it. You have a strategy that works for you. If you have a strategy, go back test it, go practice it, and you will get better. Okay, so on a daily time frame, what we can see is, and this is the stuff I'm looking out for or looking for when it comes to a break of structure, or a where price breaks any structure, and then we're looking for retracement. So we have a little structure here, as you can see, price going up, going down, moving on this area as well. So you have a touch on that, and you have another area that's been touched on the market, and price pulling up again. So you just wait, you wait for that structure being broken, and that is it. Okay, right there, as you can see, that area in the market that acted as a support was the area that was broken. Okay, so that's a break of structure. Now what we have is we have a high right over there. Okay, that's your swing high. Now we're waiting for a swing low to appear, because after a swing low, that is where your retracement comes. That is where you want price. Then from there, you want price to retrace back. Okay. So before we carry on, I just want to show you this. I'm just pulling my Fibonacci on the side here, because a lot of guys have been asking me as well, what's your settings and all that. So there, that is the settings I use on the Fibonacci. Pause the video, type it into your, in your Fibonacci settings. That is it. That is what I use. Okay, I like the colors that I'm using as well, because it's nice and easy to see the areas that I'm looking out for. Okay, so like I said, we are waiting for we need a swing high, because now price is obviously moving downwards. So you need a swing high, you need a swing low. If price goes upwards, same scenario. We're looking at a downwards movement, but it is exactly the same for the upwards movement. Okay, so now we have a swing high, we have a swing low. Okay, for those of you that doesn't know what it is, swing high is the highest point before price moved down, and then we're looking for the lowest point for swing low after price moved up. Okay, for that retracement. Okay, so that is what we're looking for. So if that appears, you take your Fibonacci from the very high of that price, the wick. That's the highest price went. Okay, so you take your Fibonacci from that high. You always draw your Fibonacci from the left to the right. Okay, you start from the left to the right. Doesn't matter if it's up or downtrend. So you have a high, swing high, and a swing low. Those are the two areas. So Fibonacci from here to there. Okay, you draw your Fibonacci out nice and wide, and now you highlight this area between the 62 That's the first line is 62%, and the last one is a 79%. That is the golden area that price retraces back to. So if price hits any of that areas in that zone, that's where you will sell off, because we are in a downtrend now. It broke the structure, so we're waiting for that retracement to break down or to retrace back to, and then we place another sell unless we see another break of structure. But we'll see if we can see one of those. So now we see price going and trying to retrace. It does not retrace all the way back, all the way to that area. So you wait. Okay, you wait for structure, and then what do you see? Price going down even more. Now what I do is I don't move my Fibonacci to that area. Okay, that's not going to be my low. I'll wait. Okay, I just move my Fibonacci, my swing low, a little bit down, because as you can see, price just moved a little bit down, took a little bit of liquidity at the bottom, and now I'm waiting for this retracement. Okay, because I need price to retrace, because price broke that structure. It broke this area in the market. Okay, that's my swing high. Now my swing low is just a little bit lower, so I just move my Fibonacci down a little bit more. So now I'm waiting for price to come to my area, and bam, that's it. That's the area that I'm waiting for, and I'm planning to sell. So now I place my sell right there. Okay, that's the area that price went into because of this structure over here. Look there. Okay, because of this structure, I just place my my risk just above that 79% area. A lot of times, it depends on how big this this area of retracement is. A lot of times, guys just place it above the 100% to be safe. But in this instance, I mean, on a daily time frame, it's a huge amount of pips. But I'm just gonna place it just above that structure, because that's the structure that price broke to. So if price breaks above it, I mean breaks and closes above it, okay? If price closes above the structure, that means there's a good possibility that price is going to turn up, and that's the movement upwards. But if price stays below the structure, okay, then we confirm, that's another confirmation that price is selling off. So that is why I place my risk just above that area, okay? You can actually, you know, have it just like that, just above that 79, just to be safe. So that is the area that I place my sell. Okay, so I wait, and you can see price wanting to go in there. So I'm just going to highlight it. So just wanted to do, there's the area, almost confused you. So that's the structure, that's the last bit. Okay, you can see price going here, wanting to break that area. I'm just going to take this out. I don't want too much on the chart. Okay, so you can see price wanting to break. I'm just zooming out. Oh, I mean zooming in. Price wanting to go above that structure. The price went higher up, but then closed below it. Okay, so for me, that's another confirmation. Okay, we see price not breaking above it. So I'm keeping my trade there, as you can see. And then there you go. Price just hovering around that area, hovering, and you know, we just wait. Just zooming out a little bit more so we can see better. Okay, so that's the structure you have. So just all you do is just hang on to your trade. Don't be scared. Just, you've got your risk in place, and as you can see, price starting to fall down. Okay, so that's your first area in the market. That's your sell that you place. And if you place that sell, I mean, you know, that's just okay. This is now irrelevant, but I mean, it's a lot of pips, as you can see. But that's your entry in the market. So now you've got your entry in the market. Okay, let's say you missed that completely. What do you have now? You have another structure in the market, another low that was formed. And where is that low? Right here. That's where price came to. Okay, it did not break. Price did not break that area. It went past it, yes, on a daily, but on a daily time frame, price did not break below that area. So that's a support area in the market. That's a structure area in the market. Okay, so you need to always be aware of that. So now, excuse me, what you are waiting for, you're waiting again for price to break this area. As you can see, price coming to that area, hitting it, and then going up again. Okay? You just wait for your setups. Do not just jump into trades. You are now waiting for price to break this area to confirm another carry on to the downside. And there we go. That's your break in the area, break in the structure. And exactly the same what we did on the top here. Price broke this area right here. Okay, as you can see, it broke it. Where is your high going to be? Your high is going to be right over here. That's your high. So now you've got a swing high. Now what are we waiting for? We are waiting for a swing low so we can catch a retracement on the Fibonacci. So now you wait and you see price not going down, excuse me, not turning yet. Okay. You don't want to, don't care about buying up or anything. You're just waiting for that retracements, because a lot of times the guys just say to me, they want to wait for these big moves. Then this is the time that you wait. Okay. This is the time you sit on your hands. Don't you jump into any other trade. There's your swing low. Okay. It's as easy as that. So you have a swing high, you have a swing low. Fibonacci from that swing high to the swing low. Okay. That's it. That's the area. So where do you want price to retrace to? You want price to retrace to the 62% to the 79%. Okay, that's the area you want price to retrace to. Then you also look at, I've got a structure here. So if price, so if price retraces to the 62% area, there's going to be a sweet entry. Why? Because you're also looking at this structure. You don't want price to go too much deep into it, because, then it's going to be like do I place the trade, do I not? So if price hits that 62%, that's the area that you want to place your trade. Okay? Because then we know price is carrying on downwards. So we wait. We hang on to the trade, and we hang on, and you see price consolidating and consolidating. Like I said, guys, I keep repeating it every time. What I'm showing you here, go back and do it on all your time frames. Do it even on the 1 minute. This is how price moves. This is price action. That's it. Okay, there's nothing else to it. Here we go. Bam. You see that candle? Let's just zoom in a little bit. Where did it go? It hit the 62% area. And that's the area that you sell. Okay, you sell that area. That's it. That's the area you sell. You put your stop loss just above the 70. I would even go 70%, but let's just do it 79% just to be safe. Okay, that's the area you put your risk. But as you can see, it hit that 62% area, and there you go. Price going down again. Okay, hit it, and then price moving. There's nothing complicated to this, guys. Okay. Nothing complicated to this. I'm just taking this out again because after that sell that you've placed, we have another area in the market. Okay. And where's this area that we're looking at? There you go. Okay. That's your another structure in the market. That's the area you want price to break. Okay. What happens is price breaks this area in the market. Okay, that's it. There's nothing to it. Price breaks this area. Now you can see, we can carry on with this video. It's going to be a long video, but go back in time. Okay, go to your charts. Go have a look at how you place your Fibonacci's. But this, guys, is as simple as you can get it. You look for your retracements. You look for your break in structure in the market. You look for that retracement on the Fibonacci. You look for your highs and lows, retracement Fibonacci to the 62%. And that is it. As simple as that. Okay. I hope this makes sense. If it did, please hit that like button, hit that subscribe button. Show me some love, hitting that super thanks, hit the notification bell. There's obviously more video content coming your way. I'm going to make a video on Fair Value Gap next. Just to kind of explain to you more about, because I've had a lot of questions on how do I see, or how does the Fair Value Gap work. I can't remember if I did a video before, but I would like to make one just exclusively on that. So then you take this video, this Fibonacci, and you take your fair value gap. And those are the two methods of trading that I use in my, in my analysis that I do every single time and all that. And it's as simple as that. Always try and simplify trading. I mean, it's just, the more you simplify it, the easier it's obviously going to get to trade. So guys, I hope you've been having a wonderful week. Stay safe and happy trading, guys.